Great day, guys. And I know we've had a crazy week, and people are probably like, what is going to happen now? Don't worry. And again, all transparency, I am still down this week. Sadly, I got into the put not at the best time, and actually, I would have been green, but I actually had to go help my brother out with his car wash today, which is the biggest day. Of course, it always works like that. But I made around $2,000 today. I think I'm still down approximately $6,000 from the initial position that I went in on. But I got out of those puts today when the market was down 40 points. Now, as you can see, it's down 106. Again, I would have been green today, or at least I am pretty confident that I would have been green. But I'll take you guys through how I chart because I have to go to dinner soon. So if I actually charted and then told you guys, probably would have taken a lot more time than me just showing you guys what I'm doing and my thought process behind it. So let's get right into it. And again, full disclosure, this is not financial advice, and I am in calls right now, as you can see here. I took AMD and SPY calls, and SPY's already at 19% because I told the team in the watch list, and again, this is the premium side, but again, you guys get a bunch of free stuff on YouTube. If you guys want day-by-day alerts, make sure to visit Chance Trades. I said if we can tag this level before end of day, I'll go long for a lotto. So this 3640.25, and it touched or got super close. AMD got to our level, a weekly demand level that we posted a long time ago, finally touched. So going long on SPY, might as well go long on AMD, especially when it touched a weekly demand level. And again, SPY 19%. They're not crazy positions solely because I always say you can know what the market might do within a short time span, but to be able to predict or quote unquote say it's gonna go up or down, it's pretty hard. I mean, we've done it countless times, and you guys have seen it firsthand where we've called the most recent major pivots. And if you watched last week's video, I explained my thought process. We had this huge expanded triangle right here, super huge. And I really would have never known that we would have gotten this huge move down and multiple fake outs, but that's how you trap the most bulls. Get this huge move up. This was insane. I was like, where is the market? Like, when is this thing going to stop? And it just wouldn't stop. This is where my puts got killed. I believe I got in probably here, and it just kept going, and I'm just like, what the hell? And then it came down, and I'm like, maybe this is the beginning. Ended up making one more higher high, which when it came down here, I did say that this is potentially wave 4, and we get one more higher high within the premium channel. Let me see, let me say, right here, I said this move might be a wave 4. We said this drop was for a wave 4, suggesting there to be a wave 5 up, which means that it's probably a rising wedge and that it will make a higher high. The fib retracements hit to the T as well. That was the 0.23 retracement of wave 3. I think it was this one. Yeah, so it came down here and then it made a higher high. So again, short-term price movements, super easy, or at least more simple to predict compared to a longer-term move. So now what am I seeing? You know, a lot of people can argue, and potentially it's true, where this is, and in the prior videos we've explained this, this is an expanded triangle for 4, come back down, wave 4, and then 5 down. So my thought process now is is this recent move up, this 1, 2, 3, 4, 5. Let's just remove all of this. Remove these two so that you guys get a nice view of the whole chart. Is this 1, 2, 3, 4, 5 a new impulse? If it is a new impulse, then this, which I cannot count 3 because you want the corrections to be count in 3 pivots. Super hard to count for this. You want it to go to the 0.61 and 78, but not retrace past the 88 for the fib retracement. So let's see. So the 0.78 is here. The question is, was this prior move oops, not that one. Is this move a bullish impulse or is it a corrective expanded flat? So if this was an expanded flat, it'll be 1, 2, 3. It'll be a 3, 3, 5. So here you see 3. So is this an expanded flat would be like this. Take out the prior low, which was here, and then take out the prior low here. And this is also at the, I believe it was at the 1.61. Or was it? Or did it reject there? No. Yeah, so I don't know. My main goal next week is to figure out if this prior leg is an expanded flat. If this was an expanded flat or if this was a bullish impulse. When I figured that out, and again, CPI I believe is on Thursday, so we got a little time to figure that out, because if this is a bullish impulse and this is a correction for this bullish impulse, that means wave 3 is next, which means we get a rocket ship to the moon with the CPI data that's coming out. So super crazy week next week. And these are the levels that I will be watching. So again, the most recent demand that was formed was here, which is where, wait, go to the 4-hour chart. We still have a little lower to the downside, which is correlated with the fib levels. So these will be the levels that I will be watching. Over here you have another level, which is why I labeled that in the watch list and what caused the market to rebound a little. Maybe it's not done. I don't know, but it hit a demand level and we're just executing based off of price action, and that's what you should always do, not off of news. This move, we said that it was gonna happen. Timed it a little bit off, I would have made a good amount of money, but I'm happy that majority of my position has recovered. A little angry today that I actually had to go help my brother, because again, I would have caught this whole move down. The members made money. The plan was set in stone. So downside, I'll be looking at this demand level. For upside, I will probably be looking at this level right here. If this is a bearish impulse, it still looks incomplete, as I cannot count, if anything. So the top 1, 2, 3, 4, 5. You have to be able to count 5 down if this is a bearish impulse. And it just looks so choppy in this leg, so I don't know. I think one of the things that would hold the market back would be this 20-day moving average. If we do get above that, we get the 3677. The risk reward isn't too crazy here. If we draw a line from here to here, you're looking at a 0.69% move. And from here to here, you're looking at 0.89. So off of simple math, this is a 1-to-1 ratio. Again, this is why I did not size big. I think there will be more opportunities next week to actually get a nice entry on either side. But as of right now, these are the two levels that I will be watching. VIX. This, we told the members demand is here, and from demand, we rocketed 12%. The question is, where are we within the VIX? And to be honest, this looks like, if you zoom out on the weekly chart, this is a crazy U pattern. This is a crazy U pattern. I've never seen such a perfect one. And again, people always say like bear markets have not peaked until they hit at least 45 on the VIX. I mean, we are still far from that. That's literally a 50% move from here. So, and also on the daily, it looks like it could be potentially I think it was a cup, yeah, a cup in hand. Oh. It looks like it could be potentially a cup and handle forming here and then here. So if we break out above this $35 level, I do think that the VIX will go crazy. And again, it's not really flashing a bunch of bearish divergences here. As you can see, the Stokes are also about to cross. You know, we're about to make a higher high, and we're still far from this level. So we still have some room to go before any sort of bearish, until any sort of bearish divergence starts to form. This is what I will be watching. The VIX has been trading above its 20-day moving average, while ES has been rejecting the 20-day moving average. Price always moves in sequences, so guys, make sure to not be stuck on a certain position and think like, you know, we're going to the moon or we're gonna dump like crazy. Though it would be quite amazing if we do see a, what is that? I can't pronounce it, but the capitulation of the market, it will just keep going down. I want to see it. I want to see the market have a circuit breaker. I just don't know if it will happen. You know, all you need on either direction, you could either have the Fed say, hey, we're not going to raise interest rates, or even CPI to go good, and the market's just going to go crazy. So it's like we are in such a, I mean, although geopolitical difficulties are still there, and I do think, I hope the video doesn't get taken down because of this, but I do think that we are going to war soon. Every country has, technically speaking, already picked their side. North Korea, all of a sudden, just wants to launch missiles past Japan into the freaking ocean. So, you know, I think something crazy is happening, and I don't think Russia is going to back down. So we have that on the back of our hands. You know, CPI goes great, the market rockets, and then you have a nuke drop somewhere. So always just go with the flow. The best is to just not swing. I know it's hard to do so, and majority of the good money is made during swings. But again, these are the two levels that I will be watching early on next week. If you want day-by-day watch lists or movement or alerts, make sure to subscribe at chancetrades.com. If you're not subscribed to the newsletter, which is again free, go to chancetrades.com, scroll down to the newsletter, subscribe to that so that you have all my levels posted. I might actually add a little more to the newsletter simply because I don't have time and I'm making this video right now. But on the newsletter, I might put a few more levels that we will be watching to go short potentially. I am still bearish in terms of the macro perspective, but I am playing a little bit of upside for now. I do think that we do bounce a little before continuing down. So have a great day, and I am out to dinner, guys. Have a great weekend. And again, trading is freedom. So that's why I am not by my computer all the time when I trade, and I don't think anyone should. People take this career to have freedom, and a lot of people in my Discord or even other discords are just there all day. When's the next trade? When's the next trade? When's the next trade? Just focus on one trade a day, or whatever the case might be. Your life will be so much more stress-free. And again, trading for freedom. You don't want to be stuck on a computer all day. I just came back from Chicago. You don't need to be in front of your computer, and I think a lot of you guys are not trading the quote-unquote correct way, and you guys are just trying to make as much money as you can. And that's also what is going to clean out your pockets. So with that being said, make sure to stay nimble and have a great day. See you guys next time.